Good evening. Welcome to the Loan Officer Training with the Mortgage Calculator. Today we're going to be talking about how to complete the Freddie Mac Forms 91 and 92 for self-employed income analysis. We did the Fannie Mae Forms yesterday. We'll get started here in just a moment. Just give us a minute to go live on all the different platforms. For those that are tuning in, go ahead and drop a comment there in the chat, and we'll get started here shortly. As we go through the presentation too, feel free to ask Jose any questions in the chat, and we'd be happy to answer any questions that you may have. All right, I see the comments coming in there, appreciate it. We can go ahead and get it started, but again, keep dropping comments. Go ahead and drop any questions you have in the chat, but we'll go ahead and get it started here. All right, so welcome everyone. My name is Kyle Hershey. I am the COO of the Mortgage Calculator, joined here by our president, Nick Hershey, and our sales manager, Jose Gonzalez. We are a correspondent lender that specializes in non-QM loans, and every Tuesday and Wednesday evening at 7 p.m. Eastern, we do these loan officer trainings. Last night, we did the Fannie Mae self-employed income analysis, and tonight we're going to do the Freddie Mac, the Forms 91 and 92 for self-employed income analysis. So with that being said, Jose, you can go ahead and take it away, and we'll go through it.
Right. Good evening, everybody. How you doing tonight? So yesterday we were covering Fannie Mae Form 1084. Today we're covering Freddie Mac Form 91, which is used to calculate a borrower's self-employed income. Now, this is very critical here because I don't want you to miss the point here as to why the Freddie Mac analysis is such a preferred form. And it basically has to do with distributions versus ordinary income, right? Business has to have distributions. Normally, the distributions amount will be equal to or greater than the ordinary income being claimed. That's not a problem. The problem arises when the ordinary income is higher than the distributions. That's where Freddie Mac shines because Freddie Mac lets us use the ordinary income amount, even though it may be lower than the distributions. If should I say higher, even though the distributions may be lower, excuse me, even though the distributions may be lower, if we can show that the business has liquidity. Why is that critical? Because we need to show that the business can actually afford, with their uh, um, assets, liquid assets, to be able to cover the distributions and to cover the income, right? If you're actually stating that you made $100,000 in income, but only had $20,000 in distributions, Fannie Mae would say your income is $20,000. Freddie Mac says show liquidity and I will let you use the $100,000. So, with that being said, let me share here. First, I'm going to start by sharing the Freddie Mac selling guide. I'm right here to a very critical page, and let me make it a little bit bigger here, right? Because in the K1 that we're going to be looking at, the a borrower has almost $5 million in distribution and approximately $1.5 million in ordinary income. So no problem there. However, want to make sure we don't make mistakes here. So I made sure I researched it for you. You cannot use that higher distribution amount for income. You can only use it to show that, hey, this business is liquid and they can definitely cover. Because look what it says here. It says, although cash distributions reported on the Schedule K1 may not be used as qualifying income, right? That means, hey, that's just a benchmark that we're looking at. If it's higher, you can't say, oh, he made $4 million in income, not the 1.5 million he reported, because it's what they reported, right? On a Freddie Mac loan, especially. So They may be used, talking about the distributions, they may be used to establish business liquidity and access to business funds, provided they are reasonably consistent with the ordinary income. All right. So today we are reviewing another of our prior President Trump's tax returns. Actually, this one is a little simpler than yesterday's. So we are going to go first quickly here to the 1040 just to show a little bit of the business related W 2 income, right? So there was, let me make that a little bigger. There was $393,229 in W 2 related income that I'm assuming for our intents and purposes here, since we don't have the W 2, we're putting that as self employed W 2 paid from one of his companies. Uh, and then this tax exempt interest, we don't look at these calculations as part of our self employed calculator worksheet because that's not self employed interest, right? So the interest we're going to be looking at in our calculator, the interest and dividends, is from self employment. It would come from the business tax returns, right? In this case, you'll do this calculation and you'll worry about it in your personal income calculation, and then you combine the personal income with the business income, and that's where you get your income. In this case, now, what I do want to point out is this other income on Schedule 1. I did some research here because notice the total income we have is negative 4.6 million, almost negative 4.7 million. So we're like, wow, right? Our borrower is not going to be able to get anything. But that's where you got to do your research, especially when it's a very complicated tax return like this. I did a little research and saw that this borrower has $65 million in carryover profit and $54 million in carryover losses. What does that mean, right? That trickles down to this $15 million loss right here. So that means you're going to have to reach out to if this was my loan, I would have to reach out to the borrower's tax preparer via the borrower, of course, and ask them for an explanation letter as to what is the source of the carryover losses. Are they non-recurring losses? If it's a carryover loss from like 5 years ago and they're carrying it over each year, the amount they're allowed, then you know what? You're going to be able to deduct each of those carryover losses from your losses. And then I think my borrower here is probably going to have a positive income, right? So now adding here a little bit further, looking at the Schedule 1, I did a little research also. This $501,255, that's a loss from the sale of an asset, right? Sold a home or whatever they sold. So that could be another non-recurring type loss. So you may also be able to add that back. Again, this is going to depend on how detailed of an explanation and documentation the tax preparer can provide. So we're looking at ways to add back a lot of income here. Now let me go to another of my pages here. Okay, page 35. And then I'm going to go to the return, the calculator, so you can see. Now, see, net loss netting and carry forward, right? So we got a lot of stuff going on here in the millions. And then here, this is the royalties page. 133,173 in royalties, $44,201 in expenses on the royalties. Right? So now we go to our calculator, right? Let's start here. So we have 393,229 or W-2 income from self-employment. Now, if that was his presidential income on the W-2, then obviously we would know we'd have the W-2, but we're assuming here, so we can do this nice and pretty, that was a self-employment W-2. The Schedule C's, there were like 4 Schedule C's, and they were both very basic, canceling each other out. So I'm not even going to worry about it because there was 4 Schedule C's, and I can only do one here. So I'm not going to worry about that part. That's the easy part. There was no mileage deductions on the Schedule C's or any of that. I mean, I'll show you here in a minute, just so keep it visual. Schedule C's. Here we go. There's one of the Schedule C's. They were all basically like this. A lot of blanks. This one had a little expense on it, and a couple of the other ones had a little expense on it. So, this is more about a learning experience. Here, there was no mileage to recapture. There were no expenses here on the Schedule C, other expenses to recapture. There was nothing here except for 87,442 taxes and licensing, which offset the 87,442 gross profit. So that's how all the Schedule C's were. So for our exercise here, we don't have to worry about the Schedule C's, but then here's the royalties, right? $133,173 in royalties, and this was the total expenses, $44,201. So now notice the Schedule E here that I'm using is the Schedule E for royalties. If it's a property, then you need a Schedule E for properties. That would be the Form 92 that we're not going to use tonight. But that's for a Schedule E income calculation for Freddie Mac. For properties, rental income calculator, I guess I should state. So let's go to now our 1065, right? So here's where we get some action, right? So let's go over now to the return a minute here, and let's go to page 1. And here we go, page 1. So our total income, 13,589,689, right? So let's see what I have here. Wait a minute. Actually, here what we got to take is the Schedule K1, which is page 45. Let's go first to page 45, and then we'll do the rest of the form. So on my calculator, ordinary business income, $1,473,263. Let me make that a little bigger for you guys. Right? So what I wanted to note here, now in this case, we don't have a problem because our distributions, 19A, is 4,902,661. We're good. We don't have to do the liquidity test because, we're in good shape, right? Distributions is higher than ordinary income. My bar is good. However, if the distributions was, let's say, 500,000, and my ordinary business income is 1,473,263, excuse me. If this was a Fannie Mae loan, our income would be 500,000. Since this is Freddie Mac, if this was a Freddie Mac loan, then we would just do the liquidity test, right? Assets minus liabilities, going into the website to get the correct calculator. And then as long as you got a positive number, you're in good shape, and you don't have to worry about it here. In my case, I'm in good shape, right? It's 1,473,263. Something else to note here is our borrower is 99% owner of the DJT Holdings. So this is multiple layering we got going on here. So DJT Holdings LLC, of which our borrower, I believe, is also 100% owner, is 99% owner of this entity. So we do all our calculations on 99%. So now we're going to go to page 1. So we went to the K1. There's no net rental real estate payments. That would be net rental real estate income or loss, nothing there. There's no guaranteed payments or to others or any of this kind of stuff. A little bit of interest income. Nothing really worth writing home about, $227. So that's all good there. So let's go back to our calculator. Now we get the added back part. Now keep in mind, only 1,488,144. Most of you, if you would not complete this calculator and you're only looking at the personal tax return or the Schedule K1 that they got, you think, oh well, okay, 1,488,144 is a borrower's income, but no, you would be leaving money on the table if you did that. That's the whole purpose of doing the calculator, right? So now we go back to the tax return and we go to page 1, right? This is where we do this. And we see now the added back portions here. We're going to now, let me see, bad debt, taxes, and here's depreciation. All right, that's 1,936,766 buckaroos that goes right here. So those of you that are diligently completing your worksheet just found almost $2 million in income for your borrower. Now, don't you think your borrower is going to be happy to be using a consultant like you, who's finding basically you just doubled their income versus what a lesser experienced MLO not completing the worksheet, just going to the 1040s would be telling the borrower that they made, right? Short selling the borrower. Now, there was no depletion on this doc here. And actually, let me go. I'll show you in a minute. Mortgage notes payable. There are no mortgage or notes payable less than 1 year in Schedule L, line 16D. Nothing there. And there is $34,875 in unreimbursed or meal or entertainment and travel expenses. Actually, is what it was, and I'll show you that schedule in a minute. Let me show you the first schedule. I wanted to show you is the statements, right? So the statements, so you could see, are we able to find any amortization, depletion, or anything like that? But I don't see anything here, just a whole bunch of stuff. But here's those meals, right? Our bar wrote off $34,875. That's what we got to hit him with the other $34,875. That's here now. If we had depletion as or amortization here, we would be able to recapture that expense. And here I wanted to show you also where that where you can see the 34,875 meals and entertainment showing right here. Entertainment is the key. That's where, if it was just meals, different, but it's meals and entertainment, that's where we get hit for the 34,875. So 34, let me go back down my list here, 875. So now we have 1,901,891, right? Our subtotal of this section, the adjustments to business cash flow section. That's the key. Number 8, adjustments to business cash flow, right? So we get 99% of that. Is that because the income that was reported in the K1 is already 99%, right? That's what they gave him, is 99%. So 1,882,872.09 cents. Don't forget the 9 cents, or your answer will be wrong. Total partnership income $3,371,016.09 is much higher than 1,488,144. Correct. And then we go. We don't have any S corp. He just had another partnership, but we're only doing this partnership and his W-2 self-employed. And we go to the bottom here, and we're using the 1 year income only in this example, right? So we picked a 1 year tax return program for our non-QM program is what we're doing, correct? $3,853,217.09 is our borrower's income that we can attribute. And then see, that's why you would never really go to the schedule. You know, unfortunately, some people, this is what they've done, and it's not correct. You would never go to the schedule K1 and just start, playing with these numbers to get the income. That's the whole purpose. This is a self-employment tax, so you don't even look at that. But again, remember the 501,000, what it was, the 50 million we're talking about, carry net losses from prior years that are being carried forward. And also you would just not go just to this front page here and just go off of these, because here you're really shortchanging the borrower. Maybe you're just going on this and say, oh, that's all, and then say, oh no, I did a little research, I looked at the Schedule 1. No, that's not it. You got to look at the Schedule 1 as a guide to, okay, I got, like what we covered yesterday, I got to now look at the 1065s, all of them. I got to look at the Schedule C's. I got to see if there's any S corp. Now this bar does have a a lot of S corp action going on through partnerships also as well. So this is a very tough full doc loan, but due to the fact that it's public information is why we're using these tax returns. Certainly not because I'm a glutton for punishment and want to do a borrower that has 100 corporations and 20 partnerships and all these things like this borrower has going on. So as you see here, hopefully your next borrower that you get self-employed will be a little simpler than this one, but definitely at the Mortgage Calculator, we can teach you how to deal with these borrowers, even the most difficult ones, so that you can all be consultants and be able to do what I would estimate probably 99% of the loan officers out there in the industry may not do, may not want to do, may not know how to do is all of these calculations for self-employed borrowers.
All right, great. I don't see any questions there in the chat. Do you? No, I don't see any questions. All right. Well, thank you, Jose. That was great. Thank you, everybody, for tuning in. Remember, we do this Tuesdays and Wednesdays at 7 p.m. Eastern, where we do a new loan officer training topic. Thank you, everybody, for tuning in. We'll see you next Tuesday, 7 p.m. Eastern, for the next episode of the Loan Officer Training Series with the Mortgage Calculator. Have a great night, everyone.